orders in this particular segment. So we can expect some good orders in upcoming quarters. So we can buy this stock on dip. But if we are already holding this stock, so we can hold this stock for longer duration.
Okay, thank you so much for that. And our technical guest has also joined us. Hello, Sarvendru. Welcome to the show.
Yeah, very good evening to everyone.
Good
A big hello
evening.
to all the viewers. Yeah, thank you.
Yes, so we were catering to queries there, and I think we have a caller now on the phone line from Vishakhapatnam. Hi, Suresh. Good evening.
Good evening, madam. It's very nice your program. You are giving a lot of time to the ordinary people in your channel compared to other channels.
It's
Very
a
nice,
pleasure.
madam.
Thank you so much, Suresh. Yeah.
Madam, I have 40 shares of GE Shipping purchased at 1,050 rupees.
Okay.
What is the 2 to 3 years prospect for this target for this company?
All right. So, Vaibhav, because he's a long-term investor, so he has bought GE Shipping 40 shares at 1,050. So, firstly, are you optimistic on the counter, and should Mr. Suresh stay invested with his investment?
So if we see in this particular segment, there were expectations that we can see good orders and good inflows of the things. But still, in this particular segment, we have not seen very huge opportunities. So I'm quite pessimistic for a while. We should wait for a while, and in upcoming quarters, as per the changes in the segment, we can enter in this stock.
All right, okay. And next up, we have another WhatsApp query written to us from Chennai, and the name of the viewer is Deen Dayalan, pardon me. And Deen Dayalan holds 80 shares of Lincoln Pharma at 750 rupees a piece and is asking for both a long-term as well as a short-term view on this. So, Vaibhav, I'll start with you first. Our viewer is sitting on a loss already. He has made a loss of about 15,000, very close to that. And Lincoln Pharmaceuticals is trading around 564. Given Trump's announcement on imposing 200% tariff on the pharma sector, do you think Lincoln Pharma could be a pain point? And even if it comes in the next 1.5 years or 2 years, how do you think this is going to sort of change the investor sentiment with regards to pharmaceutical counters like Lincoln?
First of all, yes, this company have exposure in US, so this company will also be the company among the companies who can face some revenue stress in upcoming years, because expectations are for 12 to 18 months. So we should be little cautious till the time dust is not getting settled. We should not invest in such stock till the time things are not clear. This stock will also be a risky stock, so we should wait for a while, and as per the changes in the segment, we can invest.
And Sarvendra, very quickly taking this query to you as well, because our viewer has already bought these shares and is sitting on a loss. The stock of Lincoln has been sort of consolidating and has been really flat since February of 2025. Given how the chart structure appears to be at the moment, where do you think the stock is headed in the next couple of months?
Firstly, I think so once you call us on the show, I think I have to admit here that technicals, by and large, people think it's a short to medium term kind of short. In fact, not even a medium term, but a short term research technique. But people like us who do fairly good long term calls on based on technicals also. So I would like to clear that myth on this channel once for all, that technicals can be very beautifully applied to long term trends and can give equal or far superior returns than pure fundamental analysis many times, because you are able to trade within a trade as well. So coming from that angle, that within a long-term trade, if you are able to trade a short-term and a medium-term trade, and we are believers of the fact that there's always 3 cycles playing in the market, and that is what also Charles Dow suggests in his theory, that there's a primary long-term trend, there's a medium-term trend, and there's a short-term trend. So Lincoln Pharma definitely is in a long-term uptrend. There's no doubt about that. A fairly decent, long, good-looking chart, good-looking setup. But the problem here is that the stock trades around 30, 40, 50,000 shares per day, not more than that. Sometimes more, sometimes less. But broadly, I can say around 50,000 shares it trades. So it's not a very greatly liquid stock. Number of shareholders are also in thousands and not in lakhs and crores. So around a 30, 31,000 shareholders along with you if you are trading Lincoln Pharma. So it's a small family. It's a narrow basket and volumes are low. So your beta automatically increases in such cases. So if the market falls, you slightly fall more, and in the rising market, you tend to rise more. So within that setup, I think within the short term, medium term, there's pain for him. There's no doubt about that. The stock trades below the long term, medium term, short term markers. So in that sense, if at all we break below those monthly lows around 490, 480, if that support breaks, then you will open more downsides on the counter. But if at all we are holding that number, which it looks like right now, you might pull back towards 620, 630. I think then he should at least exit once and wait for more opportunate time to buy it back. So in the short term, I think there could be a bounce back where he needs to exit, and then maybe 6-8 months down the line, probably get it at a better level.
Okay, thank you so much, Sarvendra, for that. Now we are joined by Siddharth Krishna from Vijayawada on the phone line. Hi, Siddharth Krishna. How can I help you today on the show?
Good evening, ma'am.
Good evening.
Ma'am, my query is regarding National Aluminium, ma'am.
Yeah.
NALCO.
Yeah.
Can I invest in NALCO for next 10 years? Why I am asking is, if I invest in NALCO, is my investment is safe or not?
Sorry?
If I invest in NALCO, is my investment is safe or anything?
Okay.
Any loss may I get?
Understood. So, Vaibhav, our caller Siddharth Krishna has a corpus of 5 lakh rupees and he wants to invest in NALCO for another 10 years. So, do you advise him to do that? Is it a safe bet?
For 10 years, yes, we can invest because in upcoming 10 years, surely there will be good increase in the aluminium prices. But still at this point of time, if we see companies already utilized at very higher levels, so their revenue growth will be highly based on the prices of commodity. So at this point of time, I'm not expecting a very huge revenue growth because prices are quite sideways, I will say. But for 10 years, yes, we can invest because the commodity price will increase, and in long term, this company have some good plans which will improve their capacity and revenue also.
Okay, and quickly, I want to take Sarvendra's view also on this one. Sarvendra, what suggestion do you have for Siddharth Krishna? Because, you know, the corpus is huge and even the time horizon. So I want you to give a very wise advice there to Mr. Siddharth.
Firstly, the mindset, nothing personal against him, but that's what people think. What I could hear from his question was that he's thinking, will my money be safe? There is no guarantee. If you buy the topmost blue chip mutual fund also or a company, it will always come with a disclaimer that stock market investments are subject to market risk and you can lose quite a huge amount of your capital also is always at risk. Capital is always at risk because companies are working in competitive business environments, and what happens, and I'm not commenting on this particular company per se, but there's always risk in this market. So please get out of that mindset that anybody can give you a safe, 100% safe call in this market. There's always a percentage where you can go wrong. But yeah, good companies, which I would say that right now within the aluminum place, this is among the better companies. So what happens to the company 10 years down the line? It's a commodity play. It will be a clear seesaw. It's a high beta name. It will be high beta name. Commodity plays are always high beta. So you are coming into a high beta, high risk name, and you might get good returns also in the future. But your capital is definitely at risk, some amount of risk at least, if not full. So please keep that in mind.
Thanks for that advice, Sarvendra. And now we have Dheeraj joining us on the phone line from Hyderabad. Hi, Dheeraj. Good evening.
Good evening, ma'am. My query is regarding Prestige Estates.
Okay.
I purchased 130 shares of Prestige Estates.
Okay.
At 1647 rupees today.
Yeah, I figured that out.
Today there is an update, ma'am,
Yes.
regarding Prestige Estates.
Right.
Regarding their quarterly numbers. So I have purchased those shares. Can I hold it for the short term, or will I get anything for my short-term trade, or should I go with some other counter as my query? Should I sell it and go for other counters?
All right. Okay. Sarvendra, taking this question back to you, our viewer Dheeraj from Hyderabad holds 130 shares of Prestige Estates bought at 1,648 rupees a piece. It's trading around that zone because he bought them today. And I think the business update, which was very impressive, Prestige Estate has recorded a 300% growth in its sales in Q1 of FY26. Do you think that's going to propel the stock momentum further to an attractive price band? And what do you think the range could be for Prestige Estates to trade in the next 1 year?
So the short-term trades always come to the technical guy. I would like to take the more medium-term and long-term calls as well. But yes, I'll help him. He's already got the trade wrong. The moment he said short-term, and my short-term is 0 to 3 months. So within that 0 to 3 months, the stock has already moved from 1,000 to 1,600. A stock which has already given you a 60% return, and you enter on some price-sensitive information, you forget the fact that insiders, so-called insiders, always have this 3 months ahead of you. So since all the good news is coming, you have to also remember that maxim in the market, that buy on a rumor and sell on the news. That's a broad take on this current situation. Short term is already lost the risk reward. So there's no incremental risk reward left. There could be a momentum play left for the next 15-20 days, but that too also, since the stock has not been able to clear 1750, 1760 over the last 4-5 weeks, even though this news was in the pipeline, till that breakout is not happening, I don't see the stock giving him any incremental returns in the short term from here. So he's already missed the bus, I can tell, in the short term. Medium term, maybe there could be still some juice left. Short term, I think it's a fantastic move. 60% is more than good. It's a very good return. And beyond this, to make money in the short term, the risk rewards are not favorable.
So much for that, Sarvendra. Now we have Jyoti joining us on the phone line from Vijayawada. Hi, Jyoti. Good evening.
Good evening. Hi. My query is regarding Afcons Infra. I have 500 shares at 428 price.
Okay.
The stock has slipped from 500 levels, and from so much time, the stock is trading in between 420 to 460 levels.
Yeah.
So I want to know the very short-term view on this stock, because my price target is like 10 to 15% gains.
Okay.
With the stop loss.
Okay.
And also a request from my side, could you please suggest me the better, good momentum stock at the present market situation for short-term gains?
Okay, Jyoti, but I think I'm afraid that we'll be able to cater to only one query of yours. So I'll stick to Afcons Infra for now. And for how long are you planning to hold this counter?
Like 0 to 3 months.
All right. Okay. So, Sarvendra, I know that, you don't consider, 3 months investment as an investment because it's just trading according to you, like you, rightly mentioned in the previous chat when we had. So, Afcons Infra, for somebody who wants a 3-month outlook on it, so how do you view the charts?
See, I'll give her a very simple technique, and at least she's very clear in her time frame. So I need to, she needs to be commended on that. That at least she knows her time frame. It's very clear, and from her phone call also, I think that she's more in that trading mindset on this stock. So whenever you want to do a 3-6 months kind of a trading, you have to go back and check what's been the broader range for the last 4-6 months on the stock, and if at all there are risk rewards available. So I think if I go and check, the data is very less. So short term, if I go and check. Broadly 480 to around 400 has been the range. So right now you are at the lower end of this range. So that way the risk rewards are favorable because you have 60 points on the upside to earn and maybe a 20-25 point stop loss on the downside. So if she wants to take that trade, I think she should keep a stop loss at 398 on a closing basis and try and buy as close to 420 and then look for targets in the region of 475, 480. That should be the 0 to 3 month kind of a stance that she should take.
All right, let's now talk to Snigdha joining us on the phone line from Hyderabad. Hi, Snigdha. Good evening.
Hi, hello everyone. So my query is regarding Lupin.
Okay.
So I've purchased 60 shares of Lupin today at 1912 rupees.
Okay.
So actually its high is 2,400 and today the high was 1960. So
Okay.
I just want to know if I could add more shares, and is it good to add more shares, or do I need to exit from it? That's what.
Okay. Okay. All right. Vaibhav, our viewer Snigdha from Hyderabad holds 60 shares of Lupin. She bought them today at 1,912 rupees a piece. And how do you view Lupin as a pharmaceutical counter? And are you bearish on this one like the last one as well?
Yes, I am bearish on this one because Lupin have 38% exposure in USA. So that will impact, means that can impact Lupin revenue in upcoming years, and that can even bring stress in the market, and we can even expect some profit booking in this particular stock. So we should be cautious in this stock. We can look for other better opportunities than Lupin.
Okay, thank you so much for that. Now let's go across to Chetan on the phone line from Bengaluru. Hi Chetan, good evening.
Hi ma'am, good evening.
Yeah.
I have been following through the program from long time. It's really going well. Thanks for taking my query.
Most welcome. Thank you so much Chetan for that compliment.
I have a question regarding Praj Industries,
Yeah,
where I have invested for 50 shares on the average price of 550.
yeah.
So I just wanted to know for the long term whether I can go and cumulative or I can invest more on this price, because from last 3 months it's dipping down.
Yeah.
And last year it's really performed well actually.
Yeah, yeah. Okay.
So I just wanted to view long term so that I can invest further amounts which I have with me, at least for 1 lakh. I just wanted on that view how the progress will be in future.
All right, Chetan. So, Vaibhav, like you heard, Chetan is holding 50 shares of Praj Industries, and it's a pretty volatile stock, I must say. So, you know, is it advisable for Chetan to accumulate more at these levels and stay invested with this company for another 1 to 2 years?
If we see in this particular segment only, we have seen profit booking in near terms, and all the stocks are, I will say, in a sideways trend. And this stock is trading at a PE of 45, while industry PE is of 37. So still it is trading at a higher valuation than industry, and it even have not shown a very robust revenue growth. So I will say we should be little cautious regarding this stock, and there are some better opportunities which we can look for in this particular, means in market today.
Okay, Vaibhav. And Sarvendra, quick, advice on this stock. So, do you also suggest caution on this particular counter for somebody who has invested in it and wants to accumulate more?
Yeah, absolutely. I think it's a prime case study when Consensus Build's ethanol story was played out like copybook, and the kind of euphoria and sentiment that was there, and which is there always in all consensus players which become darlings. This is the kind of disappointment that you start getting once the trend ends. So I think a fairly large euphoria, fairly large sentiment played out over the last couple of years on the sugar and ethanol story, blending story. I think it was overdone. So since the stock overdid it on the upside, possibly there could be some disappointment on the downside as well. But for me, I think a silver lining for him is that over the next 0 to 3 months, I don't see the stock slipping much below 450, 460. So that's his area where he needs to keep his stop losses if at all he wants to, and look for pullbacks in the region of 580, 610, possibly to get out of the stock, and then again, as I said, buy back 6-8 months down the line at a lower level. So no more averaging here. Look for a bounce back. As long as 450 holds, that bounce back could hold true. And in the bounce, I think you should exit and then try and buy it lower.
Okay, all right. Thank you so much for that. And now we have Rahul joining us on the phone line from Chennai. Hi, Rahul. Good evening.
Yeah, hi, madam.
Please go ahead.
Madam, I just want to check on high-tech pipes. So basically, I'm holding around 7,000 quantity at a price of 15, which I bought around in June 2021 or 2020.
Wow.
So the thing is, my concern is I'm going through this company's annual reports, everything, and recently before 8 or 9 months there was a QIP at 185 price, but I'm not sure after that it has fallen to 40% down. Not sure what's wrong, but we are getting numbers are also improving, margins are improving, everything is good, but I'm not sure why it's trading at low. So I was just thinking if it is going to be even more consolidation zone for 1 year or 2 years, and I can just sell this and move into TCS. That's what I was planning. So I just want your view on technical things and how it should be read.
Okay. So Okay, let me first wrap my head around the kind of return Rahul has made. So Rahul currently holds 7,000 shares of High-Tech Pipes, bought at 15 rupees a piece, and this was back in 2021. So by now, he's made a return of about 775% and more. Vaibhav, taking this question to you, because of the recent disturbances that the stock has seen, now Rahul is concerned about this particular investment. Do you think his next step should be to book his amazing profits and then switch to TCS?
I will say in this stock, we can see good opportunities because of anti-dumping duties imposed on China is increasing opportunities for the domestic players and which will even support this company. So we can expect good upside in this particular stock in upcoming quarters.
Okay, thank you so much for that. Now Mr. Murli is joining us from Bengaluru on the phone line. Hi Mr. Murli, good evening.
Good evening, ma'am.
Yeah, please go ahead with your query.
Yeah, I bought Bector's Food,
Yeah.
200 shares,
Okay.
at the rate of 200 shares at the rate of 511.
1511?
Yeah, you're right.
Okay.
I bought in the hope that their new plant to biscuit factory is coming into operation by Q1, expected. And the other two, that is in Madhya Pradesh, the other two, one in Khopoli and the other one in Calcutta, factory units are expected by Q2.
Yeah.
Considering this, there 26, 27 only partial benefit of expansion and 27 will have full year benefit of expansion. It has 26% capacity addition.
Yeah. Yeah.
Can I hold it for 1 month? I am incurring a loss now.
Yeah.
I am willing to wait for this fruits of this to come out.
Okay.
Is the right time to wait
Okay.
or switch?
Absolutely. So Vaibhav, since Mr. Murli has invested in Mrs. Bector's Food Specialities, he bought it at 1511. Currently, it has dropped down to 1448, and Mr. Murli is incurring a loss as well. But the company's has come up with its expansion plans, capacity expansion plans. So do you see this as a positive for the company and as an option for somebody who has invested in it to stay invested?
Yes, we can hold this stock as this company is already trading at a higher PE than industry, but they also have delivered robust revenue growth in FY25. The major reason is that in rural areas still demand is good and our government is taking initiative to improve demand in urban sector. So we can expect good revenue growth in upcoming quarters in this particular stock.
Okay, thank you so much for that. And with that, I'm afraid that we have run out of time on this edition of Ask Profit. But thank you so much, Vaibhav and Sarvendra, for being there and patiently, solving our viewers' query and giving those insightful details. And viewers, that's a wrap on this edition of Ask Profit. But please stay tuned as Sanjana Chauhan brings in Profit 360 on the other side of the break.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term? Buy.
The Nifty ends below 25,500 to snap a 3-day gaining streak, while the Sensex loses over 150 points but closes above 83,500 after a quiet day of trading. Most indices end lower. Benchmarks underperform the mid and small cap indices. US President Donald Trump announces 50% tariffs on copper imports, boon for Indian copper producers, but a bane for copper-consuming industry. Separately, he also announces 200% tariffs on pharma companies. This is, let's remember, as India waits with bated breath for the trade deal. NDTV Profits Newsbreak confirms Starlink gets the in-space authorization for Gen 1 constellation capacity all over India. The next step will be applying for test spectrum with the Department of Telecommunication. Viceroy Research shorts the debt stack of Vedanta Resources, parent company of Vedanta Limited, alleging the group structure is financially unstable, unsustainable, and poses a material risk to creditors. Sources say Tamil Nadu Chief Minister M.K. Stalin has intervened between the warring Maran brothers to call for a truce. 11 people killed and several vehicles fell into the Mahisagar River after a section of a bridge in Gujarat's Vadodara collapses. Meanwhile, Indian origins Sabih Khan, an Indian-American techie, appointed as the new Chief Operating Officer of Apple. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. Let's take a look at how the markets fared today. Benchmark indices slipped amid growing trade uncertainties. The Sensex declined by 238 points to close at 83,474, while the Nifty dropped 45 points. Sectoral performance was mixed, with the FMCG stocks leading the gains. My colleague Harsh is here with a detailed market roundup of today's action.
Well, it's more of the same this Wednesday as well. For a predominant part of the day, the market was extremely range bound. We were trading in a 70-point band, but maybe over the last hour or so, we saw some bit of volatility where the Nifty fell around 0.5% thereabouts and thereafter recovered a bit. We've closed around 0.1% lower on where the Nifty 50 index is concerned. So that's with regard to the Nifty. And now when we zoom out a little bit on the Nifty itself, we've been extremely flat this week. It's as flat as we can get. So that's the week gone by as well. Now, when I'm looking at the breadth was largely even Steven, but we kind of worsened a wee bit. Where the Nifty 50's breadth is concerned, we worsened a wee bit right towards the end. So around 22 odd stocks gained for around 28 stocks which were on the losing end of things. But a very different picture where the breadth on the overall exchange is concerned. So the NSE breadth was 1:1 at close, but we tapered pretty much through the day. So we worsened as the day went by. The Nifty mid cap, which closed in the red, but the Nifty small cap was the outperformer of the day, 0.5% higher on the Nifty small cap index. So that one really stood out in trade today. In terms of certain sectors and pockets within the BSE 500, or rather the sectoral heat map that did well, we had a couple of sectors which stood out. One was the Nifty Realty Index was down 1.5%. Metals was the other one which was lower as well. But FMCG was the one that really stood out in trade. It was a weekday of trade, but despite that, FMCG 2 out of the last 3 days has been the top sectoral gainer, and that's what's really standing out. Another note from Jefferies kind of aiding the index higher. So FMCG was that one pocket. Last off, with regard to certain names, PCBL was one that really stood out. Philip Carbon Black was one of them. But the BSE 500 top gainers, top losers, plenty of movers on either side. Union Bank on the back of their quarterly update, disappointed the street. And PCBL was one that really stood out, as Orion, the global carbon black maker, decides to shut down shop. So that's how really it moved.
Right, Harsh, thanks so much for that. Meanwhile, ICICI Prudential Asset Management Company, India's largest asset manager by active assets, has filed for an IPO with SEBI. The IPO will be entirely an offer for sale, with UK-based promoter Prudential Corporation Holdings set to sell up to 1.77 crore shares, representing a 10% of the company's equity that's worth up to 10,000 crores. Now, ICICI Bank currently holds a 51% stake, while Prudential owns 49%. Ahead of the IPO, ICICI Bank plans to acquire up to 2% more shares from Prudential to maintain its majority control. Let's also get you some insights on the highly valued sectors of defense and energy transition. My colleague Neeraj caught up with S. Narain, ED and CIO, ICICI Prudential AMC, who spoke about his views on the pockets of value that he is bullish on. Listen into an excerpt of that conversation.
Energy transition is bound to happen. If you look at energy transition, and you could play it through transmission, you could play it through, solar, but I think it is bound to happen. And given that we have sunshine, I think, as the technology develops, as battery technology develops, it is something which is waiting to explode in the next 10 years. You have to identify the right technology, and if the correct technology comes, you're going to bet on it, it is going to work. But you've seen the rare earth problem in recent times. So frankly, we believe that you have to keep one leg in, one leg out, and keep on doing work. Once you are very clear, you can actually go in with both your legs in. That stage has still not come. So we keep on doing work. See, in defense, frankly, it's a completely, it's a very difficult sector for us to understand, because no one is going to come and explain to you all the technologies involved. It is stupid of any government to come and say, here is the technology, I'm going to explain what I'm doing. It makes no sense for them. So what happens is we have to buy on incomplete information. When you are going to buy on completely incomplete information, we are capped to the extent that we can buy. Because it is illogical for any company to explain what they're going to do in defense. If they start doing that, then we would distrust this, because if that company is going to come and explain this is what you're going to do, then I wouldn't trust that company in defense at all. The less the more ambiguous they are on what they are doing, actually it means that they're actually doing defense. That is where the dichotomy comes for us. That's why I think it is very difficult for us to actually do proper research in defense. It has to be somewhere, you say, okay, we'll take this risk in this company, although this company is not explaining things to us properly, and then take that bet on a few government companies, on a few non-government companies, and then move on. You can't expect them to explain to you anything transparently.
Now, last night, US President Donald Trump warned that the BRICS nations, including India, would face a 10% tariff pretty soon. He also announced a 50% tariff on copper and hinted at a very high rate, like 200% for pharmaceutical imports. Shares of metal companies like Hindustan Copper, Hindalco, Vedanta, Tata Steel and SAIL, among others, traded in the red as investor sentiment took a hit after Trump's announcement. My colleague Rishabh sent in a report with all of the key details.
What we've seen last night from Trump coming in as well, a bunch of letters were sent out on Monday night, nothing on Tuesday night, but fresh tariff threats to BRICS countries. Of course, India is a part of that country grouping as well. So a fresh threat, a reiteration of the 10% tariffs there. There is still no sort of an announcement whether the White House will be making an announcement for this mini trade deal that India has been negotiating for. There's no confirmation coming in from India, from the Indian side, from the Commerce Ministry as well. But what we know is that I'm sure negotiators are batting for lower tariffs. In the worst case, India could get up to 46% tariffs if you include the 10% BRICS tariff, if you include the 10% baseline tariff, as well as the 26% reciprocal tariffs. That adds up to about 46%. So that is something that India is definitely looking to avoid. Negotiators returned from Washington last Friday, but since then there's been a period of lull. We're not hearing much from the ministry itself. Interestingly, yesterday, what Trump said was that each letter that he's sending out, that is a deal that the United States is making to these countries. So it's possible that a letter also comes. It's possible that a letter does not come and a separate announcement of a trade deal comes. We really don't know at this point in time what the Trump administration decides. But what we do know is that today or tonight, rather starting 9:30, we can expect more of these letters, at least seven of these letters to come out. We don't know if these will be pure tariff letters or whether these will be deals that will be coming out. So we have our eyes peeled on this over the past week, and we'll continue tracking this very, very important development.
And we will continue tracking this. Let's remember, as all eyes are on whether this very contentious trade deal will actually come through over the next couple of days. JP Morgan's Jahangir Aziz reckons that US tariffs are set to rise from 14 to 20%, a move that could reshape trade flows and market sentiment. But the key question here is, will this hike and impact investor decisions? Let's listen to his remark.
Our sense is that tariffs, which is effectively about 14.5% in the US right now, this is the average effective tariff rate, will eventually move towards 20%. It'll be made up of tariffs, these countrywide tariffs that you have right now, moving somewhere between 10%, which is their bare minimum that they have said, and the reciprocal tariffs that were announced, and tariffs on sectors such as copper, semiconductors, and pharmaceuticals, along with what we already have on steel, aluminum, and autos. Now, obviously, there are exemptions in all of these things. Our sense is that those exemptions will stay or will get diluted in part of those trade deals. But ultimately, the effective tariff rate has, in our view, another 5 percentage points on average to move up.
Now, in the wake of Trump's latest threat of imposing 200% tariffs on pharma imports, there could be severe ramifications for Indian pharma giants. Let me go across to my colleague Varsha, who closely tracks the sector, to give us more context on this very significant development.
If you see, the 200% will not be levy immediately, as you rightly said. It will take almost 12 to 18 months, and this may provide a little comfort, I would say, or a relief to the pharma companies, because the tariffs will be levied after 12 to 18 months. And this is the reason, if you see, US shares yesterday pharma shares ended in green after this announcement. So you have Pfizer, Amgen and Coherus, which were up in trade yesterday after this announcement. Now, what Trump actually said, that there are going to be tariffs at very high rate, like 200%, but they'll give a certain period of time to get this act together, and they'll give people about a year and a half. Now, if you see pharma stocks with high exposure to US, you have Gland Pharma, Aurobindo Pharma, Dr. Reddy's, where the tariff range from 45% to 50%. Lupin, Glenmark and Sun Pharma has tariff range of almost 30 to 35%. The least company which will get impacted from this tariffs would be Torrent Pharma. So as you asked me the question, in the near term, no, there won't be impact. But the analysts are saying that to set up a company or to set up a facility in US, it will take much, like 4 to 5 years to set up a facility there. So they don't see this 200% tariff into play. But we need to see, go ahead, what the Trump will, maybe there will be negotiations or not. But let's see how much India export to US. If you see, India exports almost 10 billion 10 billions of pharma goods to US, and Indian exports contributes almost 6% to overall US export. Generic provides more than 400 billion USD in annual savings to US healthcare sector. So this is the industry analysis, how much India export to US when it comes to pharma products.
And on a parallel note, Aditya Khemka, fund manager of InCred Asset Management, believes that the pharma sector has now become immune to Trump's tariff threats.
The sector is definitely not, vaccinated when it comes to tariffs, but it is definitely now seems immunized to what Trump is saying. I think pharma has now become a part of the taco trade. Trump always chickens out trade. So I don't think investors are now going to react to any more threats. Once you have heard a threat too many times, you stop reacting. I think that's where we are today in pharma.
And it's the final step in the list of regulatory hurdles that have been cleared by Starlink, with InSpace granting its authorization. And with that, it confirms NDTV Profit's May 28th newsbreak on its operations and beaming capacity. My colleague Aishwarya, who broke the story, now joining us live with all of the details. Aishwarya, take us through what we know so far, and more importantly, what's next for Starlink?
Well, that's correct. InSpace, which is our space authorization body, which gives a go-ahead for any satellite communication company to operate their satellites in India, has given and granted their authorization to Starlink's first generation of constellations. Now, they have many satellites in the low Earth orbit, which is about 2,000 kilometers from the Earth's surface. That's the low Earth orbit. They have about 4,480 satellites is what InSpace is saying, and that approval to operate these satellites has been given by InSpace, which is the space authorization body. Now, we had reported, in fact, on 28th of May on NDTV Profit that the initial throughput meaning the capacity of internet that they will be able to provide over the Indian market is about 600 Gbps. That's the initial capacity. But in the second generation, what you can expect is more capacity from Starlink, although even that is limited, a little technical, but if you go through it, you'll be able to understand better. Starlink's next step after this authorization will be to apply for a test spectrum. They will write to the Department of Telecommunications to show that their whole operation and their whole setup does work for India, and trials will be made after they apply to the DOT. Post that, of course, what the InSpace what InSpace is actually saying is that 7th of July 2030, which is 5 years from now, is the timeline for which this authorization has been given, or if the life of the Generation 1 satellites ends before that, either of it will be the timeline for which the authorization has been given to Starlink so far. So that's the update so far. And Starlink has said that they will be able to launch the service by end of 2026, not before that.
Right, Aishwarya, thank you so much for those updates. We'll continue tracking Starlink's entry into India, the much awaited one, and keep sharing all of the developments with you. Moving on, the latest in the Air India Ahmedabad crash probe. Sources told NDTV that an official from the Aircraft Accident Investigation Bureau has briefed the Parliamentary Standing Committee on the investigation so far. Here's what we know. Both the black boxes were intact when recovered and were transported via separate aircraft for maximum security. And we also understand that the investigators are now matching the decoded information with technical parameters. They will also check if recordings from the aircraft sync with its communication with the ATC. Furthermore, wreckage components will be sent to identify any potential defects. And another important issue coming to light, the latest in the Maran brothers feud. Tamil Nadu Chief Minister M.K. Stalin allegedly intervened and brokered a truce between the sparring siblings. Sources say Stalin personally called the brothers together and had a conversation with them. Let me go across to my colleague Vishwanath Nair for more.
So what sources are telling NDTV Profit is that the tussle between Dayanidhi Maran and Kalanidhi Maran over the ownership of Sun TV network seems to have ended. What sources are telling us is that the Tamil Nadu Chief Minister M.K. Stalin actually mediated a truce between the two brothers after a legal notice was sent last month by Dayanidhi Maran to Kalanidhi Maran over the ownership of the company. According to what sources are now telling us, there has been a discussion that Kalanidhi Maran will transfer some more shares in Sun TV to Dayanidhi Maran. Of course, the specifics of the deal are not yet out, but as and when details come out, we'll find out exactly how much Dayanidhi Maran will end up owning in Sun TV network. Remember that back in June, Dayanidhi Maran had sent out a legal notice to his brother alleging that the ownership of Sun TV was illegally transferred to Kalanidhi Maran's name after the death of their father. And this is why there was a big dispute that has gone on for over 20 years. And now finally both brothers are coming to the discussion table, and it's likely that the deal will be signed very, very soon.
Now, Vedanta closed over 3% lower after a US-based short seller, Viceroy Research, called it financially unsustainable and operationally compromised. The report by Viceroy Research highlighted financial risks and called Vedanta Resources a parasite holding company. The report claims that the company relies solely on cash from dying host Vedanta. Viceroy Research pointed out that Vedanta Resources has no significant operations of its own and also highlighted major discrepancies such as bait and switch funding model and irreconcilable interest expenses and inflated asset values. In order to cure these conducts, Vedanta Resources has proposed a demerger of the companies and diverted from its decades-long acquisition strategy. Meanwhile, it also responded to Viceroy Research's report, calling it a malicious combination of selective misinformation and baseless allegations. Vedanta added that the report is issued without making any contact and only to create false propaganda. Adani Enterprises' second public issuance of secured, rated and listed redeemable non-convertible debentures, or NCD, worth 1,000 crore rupees was fully subscribed within 3 hours of opening. The bond issue received bids worth over 1,400 crore rupees by 3:30 p.m. The offering was on a first-come, first-served basis, which saw participation entirely from the non-institutional segment, including retail investors, HNIs and corporates. As per the release, the company will utilize half of the proceeds from the issuance for the prepayment and the full payment of debt and rest in general corporate needs. Indian-American tech veteran Sabir Khan has been named Apple's new Chief Operating Officer. Khan, currently the company's vice president, has dedicated 3 decades to Apple, playing a pivotal role in shaping its global supply chain. Born in Moradabad in Uttar Pradesh, in 1966, Khan moved to Singapore at the age of 10. His impressive journey with Apple began in '95, and Apple CEO Tim Cook himself praises Khan as a brilliant strategist and one of the central architects of Apple's supply chain, highlighting his significant contributions. However, Khan's appointment is more than just a remarkable promotion. It underscores the growing influence of Indian origin leaders in the global tech landscape. He joins an esteemed group including Sundar Pichai at Google, Satya Nadella at Microsoft, Neil Mohan at YouTube, Shantanu Narayan at Adobe, and Ajay Banga at the World Bank, all of whom are Indian origin leaders heading frontline tech firms and multi-million-dollar companies that dominate the tech world. Now, West Bengal Chief Minister Mamata Banerjee has met Tata Sons chairman N. Chandrasekaran for the first time since coming to power. While Tata has investments in Bengal through TCS, Tata Steel and Tata Hitachi, the infamous Tata Nano plant was shifted out of Bengal in 2008 by Ratan Tata. This is the first time Tata and the Mamata government touch base in the state secretariat in an attempt to woo investment. And on to tragic news coming in. This incident unfolded in Gujarat as a section of the Gambhira Bridge in Vadodara collapsed, leading to at least 13 fatalities. Rescue operations are currently underway with local authorities, police, fire brigade and NDRF teams on site. Prime Minister Narendra Modi has announced an ex gratia of 2 lakhs for the victim and their families and 50,000 rupees to the injured. Additionally, Gujarat Chief Minister Bhupendra Patel also announced ex gratia of 4 lakh to the next of kin for the deceased and 50,000 to those that are injured. And 2 Air Force pilots were killed after a twin-seater Jaguar fighter jet crashed near Rajasthan's Churu district. There has been no damage to civilian properties and an inquiry has been ordered. This is according to the Indian Air Force. They added that they deeply regret the loss of lives and stand firmly with the bereaved families in this time of grief. NDTV's Vishnu Som joins in with all of the details.
We don't know what happened, but I think it's absolutely tragic, whatever it is. 2 pilots dead as a result of this crash. For whatever the reasons were, we do not know whether they were able to eject, or if they did indeed eject from the aircraft, what happened and why were they not able to get out. So that's a big question. Did the ejection sequence actually take place? The Jaguar fighter bomber has ejection seats, Martin Baker ejection seats. These are designed to get them out of trouble, to get them to eject and bail out of an aircraft in distress. For whatever the reason was, we do not know if they did eject or they were unable to eject. But this is the 3rd crash of a Jaguar fighter bomber in the Indian Air Force this year. There will be a court of inquiry which looks into this. The Jaguar itself is one of the oldest types operated by the Indian Air Force. They started entering the IAF in the late 70s and the early 80s. We operate more than 100 of them. They've been progressively upgraded over a period of time. There was a plan to upgrade them with new engines as well. That didn't take place. But they are being progressively taken out of service, I think, in a few years onwards. But they do fulfill an important role now in the low-level bombing sort of missions which the Indian Air Force is specialized in. I would assume they took part in Op Sindoor as well. But the fact that you've got the loss of personnel in this crash, that's deeply distressing. The 3rd crash this year.
And now let's take a look at some of our other stories that are making news around India. The DGCA has introduced a ranking system for flying training organizations as part of efforts to improve the quality and safety of pilot training activities in India. The move also comes against the backdrop of the various incidents involving planes of flying training organizations and apparent lapses. The ranking system will be implemented from October the 1st. The RBI has issued draft norms for novation of OTC derivative deals, essentially meaning that it will update the rules for how certain private financial deals can be safely and clearly transferred from one party to another, making the whole process more transparent and reliable for everyone involved. The new rules aim to streamline OTC derivatives market, and the RBI is seeking feedback on draft norms by August the 1st. The Karnataka High Court directed suspended JDS leader Prajwal Revanna to approach the Sessions Court for bail in the high-profile rape case filed against him. The court clarified that Revanna could return to the High Court if necessary after the lower court considers his plea. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Markets are always volatile, but the reasons vary. How do some of the largest investors in the Indian markets think of the current context and their view on the markets thereof? Well, we are at the brand new spanking office of ICICI Prudential to talk to one of the most decorated and largest money managers in the country on India, S. Naren. Naren, lovely office firstly, so congratulations on that, and more importantly, thank you for talking to us today.
Thank you.
So Naren, as I said, right, markets are always having reasons to be volatile, but in the current context, how do you see the risk assets currently, considering that the news flow, particularly from the US, is very high currently?
India has very good macro, very good growth story, and elevated valuations. So do you look at the macro and you look at the growth story, or you do look at the valuations? That's the confusion in our minds at this point of time. But if you look daily at US, you would worry about it. But that's what happened, you know. If you looked at US, you wouldn't have thought that the markets will be where it is today. And but the fact is that macro and growth story helped where the markets are today at this point of time.
Yeah, but I mean, since it's a confusion and since there are two questions out there, how does S. Naren think of these two questions, and which side is S. Naren bending towards?
Yeah, I think, see, ever since October 2023 or so, we have always focused on asset allocation. Because, see, markets have had elevated valuations, not just in the recent past, quite some time. And we kept saying asset allocation, we kept saying multi-asset, to now watching gold and silver zoom up in the last 18 months. So I think we have been well prepared for this kind of volatile environments. And therefore we are in good shape, because at the end of the day, the people who have followed our advice and done asset allocation, invested in multi-assets, benefited out of gold and silver. Who would have imagined gold and silver will outperform equity so drastically in the last 18 months? Yeah. So they're very happy with that kind of situation. And we continue to say asset allocation, except that there is now no asset class which is cheap. Earlier we could tell people gold and silver was looking attractive. We could say large cap is very cheap compared to small and mid cap. Now you would say that nothing is very cheap. That is the only difference between 18 months back and now.
So when S. Naren is getting these large flows, actually I'll get to that in a moment. First, Naren, just trying to think about it. When I think of equity markets per se, right, and we were doing some checks on the average P multiples, let's say for the Nifty, for 2011 to 2020 versus what's happened in 2020 or post-COVID per se, right? So then I mean, there is a difference, right? I mean, the 2011 to 2020 average P 19.5 odd, if I'm not wrong, and the last 5 years is 24 times. So current multiples of 24.5, while expensive, but are in line with what we've seen for the last 5 years. So how does one wrap your head around it?
See, if you look at earnings, earnings in 2019-20 were much lower. If you look at profit as a percentage of GDP, that has gone up in the last 5 years. So you're looking at earnings on an elevated base. Earnings in 2020 and 21 were very low.
Right.
Now the earnings in 24 are much higher than the earnings in 21.
Sure.
So you're actually looking at price to earnings on a much higher earnings as a percentage of GDP. So that's why I would say you can't say that we are as cheap as 2024 just by looking at PE. Because we also look at profit as a percentage of GDP.
Okay.
That has become much higher than 2021.
And what would the implication of that be, Naren?
Implication is that the market is not cheap at all. But the positive is that all the corporates are busy raising money. All the promoters are busy raising money. All of them are doing IPOs. All the private equity are busy selling stock to Indian investors. So you have massive activity in capital markets. And all of them are busy selling stocks to Indian investors because they are making use of the high valuation.
Yeah, but I'm surprised that you're calling that a positive. And the reason I say this is, Naren, because conventionally, right, the talk always was that when promoter bech raha hai, or when the promoter is selling out, that means it marks the top. Now it's no longer considered.
For the
right?
promoters and private equity, it is positive. For people like us who believe in asset allocation, it is positive, which means that you're not putting all your eggs in only equity basket.
Right.
So then it's okay. So then it is okay. But what we worry is our investors are overexposed to equity. Then it can be a problem. But otherwise it's giving a boost to the economy, because if you look at the amount of money that promoters and private equity are raising, I think India is possibly the only market where it's so easy to raise money for private equity. Private equity is not able to raise money in any other market. India is the only market they are able to raise money so easily, and by selling their stakes.
Did you kind of anticipate this, Naren?
No, I don't think we anticipated India will be a great market in 2020, but not to this extent that almost everything can trade at 30-40 PE. I don't think we expected, but we were always recommending asset equity, we were always recommending asset allocation. We always told people to put some money in equity. Otherwise we didn't become one of the, I mean, we definitely expected things to be good, but not to this extent.
Yeah. Naren, just one thought again, right? Because you've seen so many cycles. How do you think about this whole concept of people raising or the how do I say, the kind of selling that some of these promoter entities are doing. There are two views out there, right? You briefly spoke about it, but one of the views is that the Indian market has so much of flows that it's important for that liquidity to get absorbed that promoters are selling stake, and it's okay that the market is getting institutionalized versus being promoter owned. How do you think about this argument?
No, it has its own positive, but actually what worries us is that, in the 2007 to 10 cycle, the biggest allocators of capital were the banks. Today, the biggest allocators of capital is this entire equity market system. So the responsibility given to us to allocate money properly has come to the entire equity market system. So if we allocate money badly, it is going to hurt the economy. So it is a very, very big responsibility on the equity markets that we don't allocate money wrongly. In 2007 to 10, lot of wrong projects got financed and it hurt the markets over the next decade. So like that, it's a big problem at this point of time that we are very worried that are we backing the wrong companies which are raising money? Are we buying promoter equity when they sell in the wrong companies? Are we buying private equity blocks in the wrong companies? These are things which worry us a lot.
Recent regulation or the recent moves by the regulator on, for example, Jane Street, right? Large global investment firm, if you will, making dollops of money out of Indian options market, and then we've seen this regulation come in as well. What did you make of it? Let's start with that.
I think it's a very good step by the regulator. Actually, I think in the last few days they have done a report which shows that retail investors lost 1 lakh crores in the last financial year. That's a lot of money in the weekly settlement market in derivatives. We have been also cautioning all the investors, and SEBI has done a beautiful job in releasing all these reports and actually doing this detailed investigation. See, at heart, derivatives is a sophisticated product, and it is important that the investors who trade in the derivative segment know about the risk. Despite all the efforts of the regulator, a lot of people have been trading in it and losing money. If you look at it, the growth in the losses has been much more than the growth in the markets. And that's very worrying.
Okay, well, hold that thought, Naren. We are in this fantastic new facility of ICICI Prudential, and what we're going to do is, while I show you all of these lovely paintings around and this artwork around, what I'm going to do is, I'm going to request S. Naren to now take us to his media center, and then we continue this conversation where we talk about what the Reserve Bank of India has done and what are Naren's view on the same. And in an expensive market where Naren is touting asset allocation, what is it that within equities that he might still be comfortable with? And in conversation with S. Naren in their new office and in the media room now. And Naren, thank you for all the insights that you've given us. Now, we were talking about Jane Street and the SEBI action, and that is part one. And you are obviously saying that if anything, it has an impact on a few set of derivative investors or traders, but not necessarily on the long-term FIs. So you don't think this has the ability to break the momentum of the market per se?
No. It is a positive development. I think what has happened is a positive development for investors. Traders and weekly settlement don't make the market.
Perfect.
Investors make the market.
Okay. Has the Reserve Bank of India in the last 6 months taken steps which will actually help investors? Because I think it's been on an overdrive of sorts in trying to create liquidity, take so many good steps. What have you made of all the actions?
See, basically there was no problem with the investors. The problem was with the economy. And you needed to actually give a fillip to the economy. And liquidity was very tight. And India had very, very good macro. When you have a very, very good macro with very, very lower fiscal deficit, current account is in surplus, inflation is low, you had to get the interest rates down and make liquidity very, very comfortable, giving incentive for the banks and the other financial institutions to lend. So that's what the Reserve Bank has done. I don't think there was a problem on the investor side of the economy. I think equity market, barring 3-4 months, has been good over the last 3-4 years. So the challenge was to get the credit markets to actually lend. I think they've done all that they can on their side. Now the credit growth has to pick up. Credit growth can't be 9%. It is far too low. We have to see that acceleration now. But have they done what is needed? They've certainly done what is needed.
And do you think, I mean, in your wisdom, because you've seen so many cycles, you think a credit growth upcycle is ahead?
I think so, but I think maybe a little bit of fiscal push is now needed for certain parts of the economy. I think there are people who are indebted, and in that part of the economy, maybe a little bit of push, I think maybe on the if they are able to do in the GST Council meetings, in the next few GST Council meetings, I think the combination of interest rate cuts plus a little bit of areas like, if they were to give some benefits to two-wheeler industry or some of the auto sectors, some of the FMCG sectors, if they are able to bring down GST rates, I think the combination will lead to a massive boom in the economy. When the entire world is slowing down, India will be one of the accelerating growth stories of the world.
Okay, so effectively some consumption-led push, you reckon, is required per se?
Not in all areas. It's not required, for example, in all the higher income consumer areas, because they're doing extremely well. It is only in some of the lower discretionary consumer areas that it is required.
I mean, with the valuations that we are at, re-rating is difficult. So will earnings growth be strong enough to take the markets higher? Or do you reckon markets could consolidate or maybe correct in the near term, in the next 6 months, and while these moves take shape and take effect?
So I think in the near term, it has become a story of flows minus supply. How much money we get minus how much supply is there in the market. So if you have too much supply and the flows are smaller than that, markets could correct. As such, if you look at valuations, you can have a correction. But if we keep getting big flows because people don't want to invest in any other asset class, markets can go up. On the other hand, you have supply, which is significant every month. So it has become market has become flows minus supply, and FIs are not very keen on investing very big money, not because India is a bad economy or a bad market. The rest of the world is so cheap compared to India that people are saying, should I invest in such a costly market? So they have not been investing big money. They are investing in other markets because the other markets trade at a fraction of India's PE. So that's why they are not putting big money in India. So it has become a market where market returns are based on flow minus supply. One month supply didn't come April. After that, markets went up. So immediately then supply has come. So this is how we are looking at the market.
And you reckon flows will continue based on your assessment, at least the domestic flows?
At this point of time, it is coming. But if returns slow down, actually it may this thing. But we keep telling people asset allocation, but still equity is still the prime asset class for people. But we have to try our best, and we have to try to, because see, finally mutual funds are custodian of public money. When they make money, they are very happy. When I go to a social event, any of our colleagues go from the mutual fund industry, people are very happy. I have to tell them equities is a riskier asset class. No one wants to believe. They say that, why are you telling this? Don't say this. But we have to tell them, because on another day, I don't want to have a situation where people say that ICICI mutual fund did not give negative return. But we have to continuously tell people, asset allocation, asset allocation, and asset allocation. And along with that, we do new fund offers in interesting areas, because we think, in new fund offers, we are not looking at peer funds. We try to run the fund as we want, and try to run the fund in the way we like, and hope we can run those funds in a more defensive way if needed. That's what we've been trying to do over the last 1 year. We hope that it works.
Yeah, certainly. Though wondering, RBI has done these rate cuts, right? And therefore, I wonder which of the asset class, as you said, Naren, is cheap enough to invest in. Gold is high, silver is high. Everything is expensive. So, if equities mein paisa nahi daloge, where do you put in money?
That is why, actually, if you look at it from a medium to long-term view, people have to condition themselves to a moderate return, first of all. And how to convince them, I just do not know. How to convince them that today even the risk-free rate has come down to 6.3%. So, and if you go and tell people what is moderate return, I don't answer them. I say that double digit is today 1.5 times the 10-year G-Sec. People think 10%, what is 10%? I tell them equity can give negative returns. See, it's a very, very tough job. And honest truth is, if you look at the last 1 year, returns have been very moderate in equity. And despite that, people think equity gives very big returns. That is the irony of the situation.
Is it because the diversity of availability of sectors and themes, even if the Nifty is flattish or the Sensex is flattish, is very high? I mean, a lot of new sectors have gotten created in the last 3 or 4 years. Is the optionality value very high, or is it just that the retail investors believe what has worked in the last 4 or 5 years will continue to work?
No, I think after 2011, we have never had minus 20%. And till you have minus 20%, people will not believe me that equity has risk. People say debt has risk. That is the challenge. And that's why when I tell asset allocate, but we have managed to convince people. My sales team has managed to convince people, put money in multi-asset, put money in categories like balanced advantage. We have succeeded. And but I would still say this is not an easy task.
Most certainly. Having said that, a lot of people who are watching this would also want to know S. Naren's view on equities by and large. So you've given us your broad view. Moderate returns expected, markets are expensive. You believe large caps are the port of call within equities. Just trying to understand, Naren, a lot of newer themes, the popular themes, one where the promoters or the companies are talking about strong growth, energy transition, EMS, platform companies, etc., are mostly not a part of the Nifty 50 or Nifty 100. A lot of the promising companies are probably beyond at least Nifty 50, if not Nifty 100, right? Do you feel that there will be pockets of strength even if the markets were to consolidate / correct?
See, today if you take, for example, this electronic manufacturing, you look at the valuation, they are already positioned for 4 years of growth. 4 or 5 years of growth, then you don't know. Suppose in the 3-4 years of growth there's a bad year. It's just not. See, the markets today, there are no easy pockets. In fact, over the last 3 to 6 months, we found oil and gas to be the best sector because no one was willing to look at it. And oil and gas did well in the last 3 to 6 months quietly because no one was willing to look at it. So did anyone believe that oil and gas will deliver good returns? No one. Yeah. So the fact is actually the best opportunities today is coming out of stocks where people have got frustrated and they sell. Because every stock is discovered today. Every stock which people want to think about is discovered. So return is made today out of stocks where people have got frustrated, not delivered for the last 2 years, waited patiently, they sold the stock. We can make money out of those stocks. This is what is the easier idea because there is no stock which is not discovered in India at this point of time. Every stock, there are so many brilliant stock pickers in India today. They have managed to find it and invest in the last 3-4 years. So, but now today some of those stocks don't deliver. They wait 1 quarter, they wait 2 quarters, they wait 2 years. Then after that they get patient, they lose their patience and sell. Actually, people like us today are waiting for all these stocks where people have lost patience and they sell to us. Those are the ideas we get, rather than, new ideas.
And is it very bottom up or is it sector specific too? Are there sectors like oil and gas which are hated right now according to you?
It is coming across sectors because in many sectors there are stocks where people have lost patience. It can happen in retailing, it can happen sometimes in mid-cap cement, it can happen in every sector, it can happen in auto anchors. It is happening across sectors because you have to think about
Markets are always volatile, but the reasons vary. How do some of the largest investors in the Indian markets think of the current context and their view on the markets thereof. Well, we are at the brand new spanking office of ICICI Prudential to talk to one of the most decorated and largest money managers in the country on India, S. Naren. Naren, lovely office firstly, so congratulations on that, and more importantly, thank you for talking to us today.
Thank you.
So Naren, as I said, right, markets are always having reasons to be volatile, but in the current context, how do you see the risk assets currently, considering that the news flow, particularly from the US, is very high currently?
India has very good macro, very good growth story, and elevated valuations. So do you look at the macro and you look at the growth story, or you do look at the valuations? That's the confusion in our minds at this point of time. But if you look daily at US, you would worry about it. But that's what happened, you know. If you looked at US, you wouldn't have thought that the markets will be where it is today. And but the fact is that macro and growth story helped where the markets are today at this point of time.
Yeah, but I mean, since it's a confusion and since there are two questions out there, how does S. Naren think of these two questions, and which side is S. Naren bending towards?
Yeah, I think, see, ever since October 2023 or so, we have always focused on asset allocation. Because, see, markets have had elevated valuations, not just in the recent past, quite some time. And we kept saying asset allocation, we kept saying multi-asset, to now watching gold and silver zoom up in the last 18 months. So I think we have been well prepared for this kind of volatile environments. And therefore, we are in good shape, because at the end of the day, the people who have followed our advice and done asset allocation, invested in multi-assets, benefited out of gold and silver. Who would have imagined gold and silver will outperform equity so drastically in the last 18 months? Yeah. So they're very happy with that kind of situation. And we continue to say asset allocation, except that there is now no asset class which is cheap. Earlier, we could tell people gold and silver was looking attractive. We could say large cap is very cheap compared to small and mid cap. Now you would say that nothing is very cheap. That is the only difference between 18 months back and now.
So when S. Naren is getting these large flows, actually I'll get to that in a moment. First, Naren, just trying to think about it. When I think of equity markets per se, right, and we were doing some checks on the average P multiples, let's say for the Nifty, for 2011 to 2020 versus what's happened in 2020 or post-COVID per se, right? So then I mean, there is a difference, right? I mean, the 2011 to 2020 average P 19.5 odd, if I'm not wrong, and the last 5 years is 24 times. So current multiples of 24.5, while expensive, but are in line with what we've seen for the last 5 years. So how does one wrap your head around it?
See, if you look at earnings in 2019-20 were much lower. If you look at profit as a percentage of GDP, that has gone up in the last 5 years. So you're looking at earnings on an elevated base. Earnings in 2020 and 21 were very low.
Right.
Now the earnings in 24 are much higher than the earnings in 21.
Sure.
So you're actually looking at price to earnings on a much higher earnings as a percentage of GDP. So that's why I would say you can't say that we are as cheap as 2024 just by looking at PE. Because we also look at profit as a percentage of GDP.
Okay.
That has become much higher than 2021.
And what would the implication of that be, Naren?
Implication is that the market is not cheap at all. But the positive is that all the corporates are busy raising money. All the promoters are busy raising money. All of them are doing IPOs. All the private equity are busy selling stock to Indian investors. So you have massive activity in capital markets. And all of them are busy selling stocks to Indian investors because they are making use of the high valuation.
Yeah, but I'm surprised that you're calling that a positive. And the reason I say this is, Naren, because conventionally, right, the talk always was that when promoter bech raha hai, or when the promoter is selling out, that means it marks the top. Now it's no longer considered.
For the
right?
promoters and private equity, it is positive. For people like us who believe in asset allocation, it is positive, which means that you're not putting all your eggs in only equity basket.
Right.
So then it's okay. So then it is okay. But what we worry is our investors are overexposed to equity. Then it can be a problem. But otherwise it's giving.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Good evening, you're watching The Big Question. I'm Sanjana. India's IT sector is no stranger to long hours, relentless deadlines, and a culture that celebrates the hustle. But this week, a fresh debate has erupted. Not just about overwork, but about how closely companies are now tracking every minute of it. Infosys has begun emailing employees who log excessive hours from home, flagging them for breaching healthy limits, even as it expects them to clock at least 9.15 hours daily, 5 days a week, and to work from office 10 days a month. Now, at first glance, it sounds like a progressive shift, an acknowledgement that burnout is real and well-being matters. But for many employees, it feels like another layer of micromanagement and surveillance. Detailed logs of when you work, how long, and where. All of this comes in the shadow of Infosys founder Narayan Murthy's controversial call for a 70-hour work week, which, if you remember, had triggered outrage and a fair bit of soul-searching over whether India's knowledge economy is pushing workers to the brink. As companies like TCS to Genpact roll out new monitoring tools and stricter return to office mandates, the line between healthy accountability and intrusive oversight is now getting blurrier. So this evening's big question: are India's IT giants truly protecting their employees from burnout, or are they just repackaging old expectations in a more surveilled, micromanaged way? Because at stake isn't just productivity, it's trust, autonomy, and the future of work itself. Joining me to debate this is Ashank Desai, Chairman of Mastech Limited, someone who's seen the evolution of India's tech workplace over decades. I also have Shreya Manot, clinical psychologist who has counseled professionals through stress and burnout and can help us unpack the mental health implications. Neeti Sharma, CEO of TeamLease Digital, a workforce solutions leader bringing a nuanced view on productivity policy and employee trust. And Rahul Das also joining us, Central Secretariat member at AIIT-EU, representing workers who are now saying enough is enough. So let's set some context now. Infosys now requires employees to work at least 9.15 hours a day, 5 days a week, while actively emailing those who are logging excessive hours remotely. So reports are saying that employees are receiving emails with daily work logs, obviously sparking concerns about micro-tracking. So let's understand if these policies are genuinely about well-being or a new form of performance policing. So before I was going to go to Ashank, but I understand that he's going to be joining us in just a moment. But let me come to you now, Shreya. We saw that Deloitte's 2023 study found that over 80% of Indian professionals are reporting burnout symptoms. So on the one hand, employees are receiving emails that stress maintaining a healthy work-life balance is crucial, yet also detailed how many hours each person worked at home. So how do employees reconcile care with the feeling of constantly being watched, and what does the data tell us about, how surveillance affects, employees' general mental well-being?
Right. Yeah, it's such a pertinent issue right now, correct? Now, when we're constantly managing the employees' time hours, the number of hours they're spending at work, it is definitely making it more rigid for some individuals, because individuals like to function at their own capacity. Some people might like working for long hours, some people might not. By putting a timeline to it, we are kind of making it rigid for individuals, while at some level, it's also helping by establishing clear boundaries, offering predictability, and maintaining fairness and consistency. What is definitely not working out is taking away the freedom from employees to manage their own time, which really helps them function better. It increases job satisfaction. So this is definitely very detrimental at this point in time for the employees' well-being.
Are we seeing a contradiction then, promoting balance but also rigid metrics? Rahul Das, on ground, how are employees perceiving these policies? Is there trust that you would say that management genuinely wants them to switch off?
Well, there is no trust. Let me be very honest and put it pretty briefly.
Okay.
Data has always consistently put such lame justifications at rest. So we know that in Europe, the average work week is 36 hours. In the United States, it's 40 hours. Now, we know we should be mindful that India is basically the by default support system for the global businesses. Now, then why do the Indian managements of the multinational companies and pan-India corporates resort to such retributive people management system? Now, what is this warning letter basically? Warning letter is nothing but a machinery at the employer's disposal that they would want to use as an element to instill fear among the employees. Now, we know that the unemployment rate in India is high. It has gone up in May 2025. In April, it was 5.1%. It is now 5.6% in May 2025. So when we have such drastic, such disastrous employment rate in India, people are always feeling uncertain. They are suffering from a lack of security in their job. So they are kind of compelled to accept whatever comes their way and then just work quietly, wherein the companies, they don't at all pay any attention to the existing labor laws. The overtime, there is a legal provision in the state labor laws to enforce compensated overtime work, whereas the companies don't pay any heed. In our opinion, we believe that the root cause of all these problems is the lack of implementation of the existing labor laws. If the overtime can be enforced in some way or the other in the IT industry, in the ITES sectors, that would give some sort of relief to the employees. Of course, we need to be also mindful of the reasonable restrictions that the state labor laws impose on this, that
Sure.
there is an upper cap of the overtime hours. Yes.
Okay, Ashank Desai also joining us. Welcome to NDTV Profit and the Big Question. You've built and led companies through India's IT transformation. Would you say this shift signals genuine care for employee health, or is it simply an evolved form of command and control? Because are these policies inevitable in hybrid work?
45 years of Indian IT industry history, which I have lived, we have grown 5,000 times from 50 million to 250 million.
Okay.
This would not have happened unless we took care, industry took care of the employees, and 6 million of them are working with us. And they themselves are extremely responsible employees. They do not take necessary instructions only from the company. They work for our customers. They understand value of serving their customers, and they interact with our customers in our business. Our IT services business, you must see what business we are in. We develop software, or we develop their processes and interacting with customers all over the world. So employees know what it means to be a work-life balance, and they have been in industry has been working along those lines. I don't know if there is some aberration somewhere. We are making as if whole industry is doing something. It's completely unfair statement to make that industry does not care about employees. We would not have reached this level of success without taking care of our employees extremely well. Of course, you can always find some exception somewhere and say that, okay, oh, this is what going wrong. I think it is completely unfair to judge a company, the industry based on this. Is all that I would say at this point of time.
Okay, fair. So let's also talk about the employer's dilemma, as Ashank Desai rightly laid it out. Accountability in the hybrid era. I'm going to refer a report by NASSCOM, which estimated over 55% of India's IT employees are still working in a hybrid model. So is some monitoring unavoidable, or then have companies taken it too far, something that we probably need to break down? Neeti Sharma, as a leader working with thousands of tech professionals, do you believe productivity tools have crossed into intrusion?
I actually don't think so, because like you called out, this whole hybrid form of working, and why are employers insisting that employees come into office? I think there is a very thin line between trust and intrusion, in today's digital world. And we all know that unless we are trusted, supported, empowered, we'll not be able to perform what we have to. But we've also seen, specifically in the hybrid model, we see employees are logged in for many hours, but their productivity is suboptimal. And I think that's the reason why many employers may want to look at, hey, you're supposed to work for 9 hours, be productive in those 9 hours. No one, I think, beyond a point is expecting employees to work for 14 hours, 15 hours, 20 hours a day. Yes, there are days when projects demands that we stretch ourselves, but I think just staying logged in is not equal to productivity. And I guess that's where the employers are coming from. Mr. Desai alluded to this very clearly, right? I think if we are able to give that balance to employees, and I think most employers, most IT companies have done very well in terms of giving the right infrastructure, the right support, the right hand-holding, learning, technology enablement, and also the hybrid model. I mean, why is it that IT is still talking hybrid, whereas many other industries have gone to full-time coming back to office? So I think people understand that there is a need. Having said that, there will obviously be stray cases where somebody is really stretched, will need to work for the 12-14 hours, but because of the 9-hour policy may have a challenge. And there are other stray cases on the other side where people are just logged in for hours together and the productivity is really low. So I guess the employers will have to figure out what works for them best. I mean, we're talking about Infosys today. Tomorrow it would be somebody else. Each one of us to our own. Whatever works best for me. And I'm sure that there are instances where employers have found employees not doing what they're expected to do within the timelines, and which is why these kind of policies are also coming back. And apart from all of that, employees have been crying hoarse saying there's no work-life balance. I don't get time for myself. I perpetually, clued into onto my laptop. So here is an organization saying, hey, finish your work in the 9-10 hours that I'm giving you and take the next few hours off. I guess we'll have to just figure out a way which works for both of us, the employers as well as employees.
Das, then what would you have willed or felt that maybe the companies could have done better if, well, let's give them the benefit of the doubt, if going by what Ashank and Neeti are actually saying, how do you think they should have approached this then?
Well, I mean, see, how they should approach this, then we need to be very careful about the policy. If we're talking about policies, the policy should be in accordance with the law of the land. We have the law of the land. We had the 29 labor laws. We know that several other trade unions under the umbrella of Center of Indian Trade Unions have convened an All India General Strike today, as we are talking now. So what is the primary demand of this strike? The primary demand is basically to repeal the newly introduced labor code. Why do we oppose labor code? Labor code clearly rips off the employees. Even the definition of worker is going to be changed. Any person who is earning anything above 18,000 rupees per month will not qualify as an employee. And if they don't qualify as an employee, then what happens? Their employee benefits can be stripped off anytime. The whatever protection they had against illegal termination in the Industrial Dispute Act 1947 is going to go away pretty soon. So these are the reasons why we are in favor of this general strike. And going back to the question that when a person cannot meet the objectives, the work objectives in the 9 hours, only then they are made to work outside office hours, I would beg to differ in this case, because we have multiple cases across India that we as a union are trying to handle, wherein people, they deliver to the best of their abilities in those 9 hours that are allotted, that they are paid for, and then that is shift 1. And then the same day when he travels and reaches home, he starts another shift for 4 to 5 hours, that is shift 2 in the same day. And this additional 4 to 5 hours is never compensated. So that is why we keep reminding people that there is a law of the land that keeps the upper cap, that keeps a reasonable restriction on the overtime hours, and at the same time makes it mandatory for the organizations to enforce overtime payment, right? So we are not against work, we are not against productivity, but what we are just suggesting is that if you are making me work for more than 9 hours, wherein you are paying me for 9 hours, then you have to pay the overtime hours. The moment this thing is implemented, I believe this is the root cause. If this is implemented, then we and the pan-India corporates who are selling the Indian labor in the foreign market would realize that the labor is still being sold as cheap, but it is just not free. They are not stealing the labor from the employees free of cost. That is the only point that we would try to make here. And at the same time, the warning letter, all those things, these are internal policies. If a company wants to increase the surveillance, if they want to micromanage, that would completely rely on the company, how they would want to enforce a policy within their organization. But it should stick to those 9 hours. A person cannot be forced to log in, even after going home from office, to provide some extra support and do some extra miles. And at the same time, that is not going to help in any way, because when the annual appraisal time period would come, the increment would still be 3%. That would definitely beat the flexible inflation target system that has been set by the government of India to address the inflation rate that is set to 4% plus minus 2%, the global inflation rate. So as I am saying, the data reveals that we have 5.6% unemployment in May. The increment, the average increment, 3 to 4% hardly beats the inflation rate. So again, the data that we have as a union would kind of give you a different picture. So yeah, that's all I have to say here. Thank you.
All right. Ashank Desai, would you like to respond to that?
As I said even earlier, to assume that Indian IT industry works where it is a command and control kind of environment is a misnomer. You can always pick one example, two examples somewhere and say that, oh, this is what is happening. As I said, there are 6 million people working in this industry. All of them are doing well, all of them are paid well. And as I said again and I repeat, most of them work hard for their own volition. They carry the responsibility of doing the best job themselves. They think that it is a good thing to deliver to the customer service because if the company does well, they also do well. So this is a whole system which is based on win-win solution for the last 45 years. Otherwise, we won't be here. If we had started as if it is made, as if we are kind of exploiting employees, we would not even reach here and we would not have become global player. So to say that somebody is working hard on a particular day, yes, it might be happening. I am not denying that. It would be happening if customer wants something, a service at a time. Now some of these get reflected into the appraisals, some of them get reflected into incentives, promotions, somebody who works hard. So there is no free work that is being done. Now each company has a different policy. I don't want to get into overtime policies, but the point I am making is, what is the context? The context is of a win-win with employees and customers and management to deliver best services to the world. And we are doing that, and in that, to say that we are exploiting or some people may be taking an exception and showing it is not fair is all that I am saying. Let's not paintbrush whole industry as if it is going all over. Is all that I am saying again and again.
All right, accepted. Shreya, if the intent then is to safeguard health, what better tools can company use then instead of hourly reports like this?
Right. I think the most important thing is instead of like supervision is great, like it's nice to supervisors know what your employees are doing for you. But what would really help is to define core hours and flexible hours instead of just kind of putting it down to okay, X to Y time, right? In allowing the employees to decide these are the core hours and these are the flexible hours really helps them also maintain their personal life to a great extent. What I also think is that when these policies are being actually implemented, it's very effective if you take the employee's thought process into perspective as well, because every employee is different. Just like some people like working extra hours, some people might not. There is a preference that individuals have. So it's nice to tailor your approach towards employees by focusing on what their needs are. It's also very important to make sure that you lead by example. For example, restricting after work calls. That is something that people on a hierarchical higher level can maintain, which is mostly not maintained. As much as it sounds great to hear that some employees like working extra hours to complete the work and deliver to the client, we also have to understand that sometimes they don't have the option to really complain because they don't have an option, right? So another thing that would be very effective is to manage the workload, is to constantly keep reviewing the workload every week, every 10 days to make sure that we are not overburdening any particular employee. It's also great to offer flexible hours to employees to help them manage their time in a better way rather than the organization managing it for them. Unless there are fixed deadlines, that's fine. That is where a little bit of rules and foundations can come into picture. But flexibility is something that would really help.
Okay, because I'm glad that you raised the aspect of flexibility because, Neeti, that also kind of brings in the aspect of your female employees, right? That would maybe prefer a hybrid model, would maybe prefer a model with some amount of flexible hours because let's be realistic about the kind of unpaid and emotional burden that most women in the labor market or in the workforce actually have to take on. So from that perspective, I want to ask you, if you were advising Infosys or TCS or Genpact today, what would you potentially tweak in their approach?
Yeah, so I think because the IT industry by and large works across multiple geographies, the fixed 9 to 5 at a go 9 hours probably will not work for anyone. You know, if I'm working in Australia time, I'll probably start at 7 in the morning, but I take a break at about 10 and then I log in for a UK or a US timing, which would probably be much later in the day. So effectively, I may still do the 9-10 hours, but I have staggered timings, and I think companies are looking at giving that flexibility to a lot of employees. So again, the question on the table is not about a fixed 9 hours back to back. If you're in office, yes, but if you're working from home, I think the staggered 9 hours is going to be very critical for people to not only just stay within the 9 hours, but also be productive in those 9 hours. Women, for example, like you called out very clearly, and I think a lot of IT companies have great policies for women employees who need flexibility to bring them back into work after a break. So I think just ensuring that they're executed well, every manager is aligned to those policies and they allow the employees to get the time that they need is important. Just a data point, in the IT sector, at the entry level, we only have 30-35% women participation. By the time it hits the boardroom, it's only 8%. Obviously, what we need to do is to bring down the pilferage in the middle layer. And that can only happen by just creating an ecosystem where women employees thrive. And flexibility, hybrid is just one part of the ecosystem that we're talking about. There's obviously lots of other ways and means to increase the women participation.
Let me ask this because I have 5 minutes left and I'd like to get insight from all of you on this. And Rahul, I'd come to you first. If you were to ask or you wanted one policy change, what would you recommend so that health and trust are protected while also maintaining performance?
I would say we should start with the enforcement of the compensated overtime work.
Okay.
That is the primary thing that should be enforced. Why people are shying away from that? I mean, it's okay. You make people work, and along with the reasonable restrictions as imposed by the law of the land, why not introduce that? Let us start with that. I have a huge list. I can go on, but yeah, let us at least start with that.
Just one for today. Just one for today. Thank you, Ashank. I know that you have actually spoken definitely in favor of this and given actually a fantastic nuanced perspective. But if there is one change or one policy that you would have liked to see or something else that you'd like to see, what would it be?
You mean the policies that IT industry should follow? Is that what we are saying? I am not clear of your question. So,
if you had to see a tweak or if you had to see any kind of change in the industry, what would it be?
Any kind of change you are saying?
Change, yes.
Yeah. See, the issue that you talked about, women in the workforce, certainly needs much more attention by us, particularly in senior management. The 8% number that we talked definitely is something around that number, which is something that we got to change. We need to have policies where we encourage, whether it's a hybrid work, whether it is any other kind of policies that we need to have, to make see that the second half of our population is as represented as at least 30%, if not more, to start with, because that's the number which is at the entry level. At least we should have that. And I would strongly recommend that we need to have some policy to make that happen.
Right.
Internally. We don't need some global outside policies.
Yeah.
IT industry has worked on building the employee-friendly policies themselves. Let me tell you that. We were not told by government to do A, B, C, D, E, F in terms of building our workforce.
Sure.
Again, we won't be here unless we had proactively initiated policies take care of our employees. We can always do better. One of the areas certainly is this, where I would like more effort of us.
Okay, Neeti?
I would just call out that the productivity tools that organizations are using should empower employees and not intimidate them. I think it's important that that trust remains, because if that goes, then forget productivity, even just keeping people together becomes a big task. So I think that's really a call out for me.
Fantastic. And Shreya, to wrap it up?
Yeah, sure. I think the most important change that I would like to see is to focus more on productivity rather than work hours, and to have employees' involvement in the allocation of workload. As much as I understand there is a clear reason for senior junior demarcation, it's always nice to have your employees' point of view included when the workload is being allocated. So I think that is very important from a mental well-being perspective.
Thank you so much to all of my panelists joining me for a very, very important discussion this evening. This is as India's IT sector is standing at a crossroads. On the one hand, companies like Infosys and TCS say they want healthier, more sustainable work cultures. On the other, employees are still grappling with long hours, tight controls, and a sense of being constantly measured, even in their living rooms. So as hybrid work becomes the norm, the question isn't just about how many hours you log, it's whether trust and autonomy can survive the pressure to stay hyper-productive. Because in the end, work-life balance can't be achieved through spreadsheets or surveillance. It requires something far simpler and far harder, which is a genuine cultural shift. Thank you to all my guests, and thank you to you viewers for joining us once again.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. We've got a great show lined up for you. We're going to be talking about the age-old conundrum about real estate versus REITs versus actually real estate stocks. And we'll also talk about jewelry versus gold ETFs versus jewelry companies like Titan. But before we get to that, let's talk about the latest data that was shared by the Association of Mutual Funds in India. This should give you a perspective on how people are investing into mutual funds. And the first headline is that the SIP inflows, the gross inflows through SIPs has come in at a record high of 27,269 crore rupees. It eclipsed the previous record, which was established in the month of May. Now, what is interesting is that you have a return to normalcy somewhat when you talk about inflows into equity mutual funds, and I'm talking about active equity mutual funds, because the net inflows to the extent of 23,587 crore rupees, and that compares with an inflow of 19,000 crore rupees approximately in the previous month. Remember, May was when you saw quite a bit of uncertainty on account of Operation Sindoor, and that had a bearing as well. You saw sizable inflows in May through new fund offers as well, over 2,000 crore rupees, and that was halved or more than halved in the month of June. So despite that, you saw reasonably good inflows, and the areas where you saw those inflows were in the form of flexi-cap funds, which saw inflows of about 5,700 crore rupees. You saw small cap funds, mid cap funds, large and mid cap funds, as well as multi-cap funds, all that got pretty decent numbers. What was interesting was that the sectoral and thematic category, which is the largest in terms of assets under management, only saw inflows on a net basis of about 475 crore rupees. And there was also an NFO, that is a new fund offer in the category. So if you remove that, there was actually an outflow from this category, which I find interesting. And it might be an indication that money is being taken off the table in certain categories. I wouldn't be surprised to see that a defense fund is in that category, because you've seen a big run up over the course of the last month and a half to 2 months. What else is interesting? You have arbitrage funds, which a lot of people are now using as opposed to short-term debt funds, where you have inflows of about 15,000 crore rupees, which is quite substantial, and a lot more people are buying into the idea that the tax efficiency is what gives this category a bit of a kicker. And given that you have assets under management in this category that are now pretty substantial at 2.5 lakh crore rupees, a lot of people are buying into this idea. And the last point that I will make to you has to do with gold ETFs. Now, in the last few months, you've actually seen very anemic inflows, if at all, into the gold ETF category. And that's despite the fact that gold prices were very close to all-time highs. In the recent past, gold has not done too much, but you saw inflows of over 2,000 crore rupees in the month of June, and that's a 5-month high. Seemingly, people are buying into gold once again, given the elevated uncertainty around the world. There are two age-old questions that Indians have always debated. The first one is, should you buy a house or should you invest in equity? I wanted to spin it a little bit. And the second question, by the way, is, should you buy gold as jewelry or should you buy a digital form of gold? The spin that I'm adding is, should you buy real estate as a house? Should you buy a REIT, which is a real estate investment trust? Or should you buy a real estate company, that is a listed company that makes homes and other forms of real estate? And the second question that I want to twist is, should you buy jewelry or should you buy a gold ETF or should you buy a jewelry company, something like a Titan or any other company for that matter? And to talk about this in more detail, I'm joined by Vishal Dhawan, who is the founder and chief executive officer of Plan Ahead Wealth, as well as Santosh Joseph, who is the founder of Germinate Investor Services. Gentlemen, thanks so much for taking the time. Vishal, I'll start with the first question, and it's a slightly long question. What are the pros and cons in the first case when we're talking about real estate as a house versus a stock versus REITs?
So I think fundamentally they are very different forms of investing, even though they ultimately give you exposure to an underlying asset class which is the same, which is real estate. So let's take them one by one. If you look at physical real estate, typically you'll find that the advantage of doing physical real estate is that it feels very close to you because you actually own it. You can walk into it, you can rent it out. You have a lot of control in terms of what you can do with that asset. But in order to get that control, you could end up having fairly significant costs associated with buying it on one side. Those could be stamp duties, typically 4 to 7% of the value of the asset. You could have registration costs, very often about 1% of that cost. And then there could be other costs all coming together, which could mean that your cost of ownership increase between what is stated versus what you actually end up paying could be in the region of about 10%. So, a lot of what you see on the price needs to be inflated to that extent to get you the true price. And if you add a loan on top of that, that cost goes even higher. The other thing around real estate is that, physical real estate, is that liquidity in that asset can be fairly challenging, especially when you go through a bit of a downturn. And we've seen multiple cases where it can take months or even years to be able to liquidate that asset if required. And last but not the least, if you need to manage it because you choose to rent it out, there could be a lot of work that you need to do, from identifying a tenant to ensuring that the property upkeep is maintained. You have maintenance costs which come in, etc. So one needs to keep in mind that while the comfort of owning it is very high, there are additional things which go along with it. Now, in contrast, if you look at real estate